This is the weekly review for the week of May 29th to June 2nd, as well as this week's Sunday preparation. So, Monday was a bank holiday. It was Memorial Day in the US, so I didn't do anything that day, and I was just anticipating consolidation because it was Monday and it was a bank holiday, and that's exactly what happened. So, when I got onto the charts on Tuesday, New York session, I wanted to see what happened in London. And basically, London gave us a raid of Friday's low, previous day's low, with a SMT on GU. And also, we were dipping down into Tuesday right here, the volume imbalance, as well as the weekly order block here. So, and then we had this displacement up. So coming into New York session on Monday, I was bullish, anticipating that price wanted to trade up into this daily order block here, right? That's Tuesday, and I was thinking that we would trade up into this daily order block, and that DXY wanted to, here's Tuesday, wanted to trade back down into um, its daily bullish order block to continue higher. So that's why I was thinking that Tuesday was going to be the low of the week. And I set a limit here at the fair value gap and breaker on the hourly chart. Um, I didn't set a limit in discount just because we had the confluence of these two PD arrays nested together, plus all of that other context that I just explained. And I felt that it was okay that the vast majority of, or the bulk of these two PD arrays wasn't in discount, but with all the other context together, I felt that this was a high probability setup. Now, one of the issues with this was that on a lower time frame, there was no displacement reaction on like M5 or M15 off of that H1 breaker, where when we get to Tuesday, you'll see that there's a huge displacement off of that hourly breaker. But here we had expansion in London, but New York didn't really provide that retracement and continuation of London's move. It really just consolidated. So on the M15 and on M5, there was really nothing set up here to take an entry on. So I just based the entire entry on the hourly breaker and fair value gap. And I'm just noticing that my trade um, markers are not on. So it was like this. And then I was planning on taking a partial above this high here, above Friday high, and then the ultimate take profit would have been at that opening price of the daily order block here. So this position got stopped out on Wednesday. So I was kind of reassessing the situation on Wednesday. So this breaker here obviously got violated. And on New York session on Wednesday, we created this new bearish breaker. So we took Monday's high on Tuesday. Now we had this displacement down, breaking market structure, and we took previous day's low, but we also had an SMT with previous day's low. So I was still wondering if this was, because we had an SMT here, I was still wondering if this could have been a Wednesday low of the week, right? But I basically wanted to see what the reaction was going to be off this hourly bearish order block here, bearish breaker, excuse me. So down on the 15-minute chart and also on the M5 chart, I noted how price came up into this multiple time frame inefficiency here. So all the way from the H4 down to the H1, or down to the M15 rather. So we had that right in here, this fair value gap, also fair value gap in here, hourly fair value gap, and M15 fair value gap in here. So we traded up into that in New York session, inside that bearish breaker here, and we rated the midnight opening price. And then we had immediate displacement away, right? So what I noted in my journal was this low time frame reaction off of this hourly breaker compared to what we had on Tuesday, right? There was nothing similar here. So this reaction here at 10:05 is what got me bearish. And then we created these equal lows here with London low. So I set my limit at this M15 breaker here. Inside this multiple time frame inefficiency as well. And I put my stop above the high of the fair value gap. And this was a about 1.5 R trade. So this one had just everything was super clear to me when taking this trade here, compared to Tuesday, where again we didn't have that displacement reaction on M5, M15 for extra confirmation. And I just took the whole thing off at these equal lows because I was still unsure of the weekly bias, whether we wanted to go higher or lower, because we still had this bullish SMT with GU. But at least to this short term or lower time frame sell side liquidity pool, the draw on liquidity was clear when we had the entry up in here in the late silver bullet hour here at around 10:40ish. And the other thing that I noted was this multiple time frame inefficiency on M1 to M3, where we displaced off of this M15 breaker. We broke market structure on M1, and then on this low time frame range from that low to that high, we traded up into a premium, just tapped that, and came up into this fair value gap. I think on the M3, the fair value gap encompasses that larger area. Yeah, on the M3. So what I noted about this specific day was like the layered reaction that we had. We came up into H1 breaker, broke down on M15 and M5, got an entry on M15 and M5. Then we broke down from the M15 breaker on M1 to M3 and got an entry on M1 to M3, right? So it's all fractal based on the reaction of hitting into a higher time frame PD array, entering on a lower time frame, hitting an even lower time frame PD array, and entering on an even lower time frame, all the way down to the equal lows drawn liquidity. And then after that, we came up into this M15 order block here to trade even lower, but I wasn't concerned about this here. After we took those equal lows, that was it for the day for me, and also because this is Forex and we don't trade beyond 12 p.m. New York time. But we came back up into this bearish order block on M15 and traded down here to the mean threshold of the daily order block here. So this order block, right to the mean threshold of that, right to the bottom of the volume imbalance here, right? So at the end of Wednesday's trading, when I was doing my review at 6-7 p.m. ish around here, I saw we had this displacement away from those two key high time frame levels, and we still had a GU SMT with previous day's low. So what I noted before, or what I noted that I was going to look for in Thursday's trading, was if we violated this bearish breaker here, right? If we violated this bearish breaker and closed above the 9 a.m. high here of Wednesday, this high, right? This would create a new bullish breaker. And that's exactly what ended up happening here on Thursday's trading. So I wanted to see that I wanted to see what would happen with this breaker to determine whether we were going to go higher or lower for the week. Because at Wednesday's close, I still didn't know, right? We had all these bullish signs, but if we came back up into this breaker and continued to respect it, then I would look for shorts on Thursday, right? But because on Thursday, we violated this breaker here, and now we have a new bullish breaker rather, right? Low, high, low, lower low, SMT, mean threshold of that daily order block, and the low of the volume imbalance is this exact low right here. Now, London has displacement up. So my same logic that I was looking for on Tuesday, where New York was going to have a retracement and go higher, was exactly what I was looking for here. And that's what ended up playing out, where at the 8 a.m. hour we had that retracement, and then the rest of the day was bullish, all the way up to that daily order block open that was looking to be hit on Tuesday. So going down into the lower time frames, I was watching this, and I didn't blindly buy this retracement here into the M15 breaker here. We also came down into this hourly order block here. I wanted to see a low time frame reaction, or if we were going to have a low time frame bullish reaction after we dip down into this confluence of higher time frame PDRAs, also dropping into discount of this dealing range. So I was looking initially on the M1 chart to see, and I noted how, see that M15 breaker, hourly fair value gap in discount. We had a market structure shift here, came back down into this M1 fair value gap here, and had displacement higher. And I think we had news at 8:30 here. So at this point here at like 8:31, I was looking at the 2-minute time frame, and I saw that we came into all of this high time frame PDRA confluence in discount, respecting lower time frame arrays on M1. So I entered in here in this 2-minute fair value gap. Now, I eventually here got out at break even because I got a little bit nervous. And the reason for that is I thought that this entry was going to be an institutional order flow entry drill where we were just going to dip into this fair value gap a little bit and then go higher. I don't really like those entries. I'd rather get an entry in discount, which this from this dealing range low to that dealing range high here, discount is here. And we see that price retrace down into discount, into the fair value gap, into this bullish order block here. If I had gotten entry at discount here, I would have been much more comfortable allowing price to retrace against me here, right? And I would have held it, and then I would have been in on this bullish move up. But I got in too early for my liking. But this is also something that, in general, I don't understand when to anticipate that institutional order flow entry drill versus when price is going to come back down into discount, which is the entry that I want when I'm looking for a long setup. Because here, when I saw this displacement up, I saw that, or I realized, I got out and my bias was right. But here we had the institutional order flow entry drill. So this is where I cut the trade at break even. We had this displacement up. I marked out this new dealing range. Right here, that's the institutional order flow entry drill. Just dip back down slightly into this inefficiency here, not coming back down into discount and not coming back down into the breaker and mitigation block right here, right? So the biggest question for me that I noted in the journal is like when to anticipate this versus when to anticipate the retracement into discount here. This was that 2-minute dealing range that I was looking at. But overall then, Thursday delivered, giving us, going out to the M15, the equal highs here, Tuesday high, Friday high, and then eventually Friday gave us into that daily order block here. So by the end of Thursday's trading, the weekly objective was already met. And for Friday's trading, I was anticipating a potential retracement into the weekly range, right? Because if we're hitting a daily order block, higher time frame level on a Friday, and making the high of the week on a Friday, that's significant confluence that Friday is going to be bearish and retrace into the weekly range. Now, we didn't really get any setups here because Friday was NFP, and as we would expect, we just consolidated prior to NFP. And then there was no real clean setup that I noted here in terms of the 2022 model that I trade. No entries in a fair value gap here. The only thing that I noted was this fair value gap entry here, but we see that price action is pretty lethargic. The move or the volatility was at 8:30 and a little bit after that. So I didn't do anything on Friday, even though I did anticipate this retracement into the weekly range, and also we had this low resistance liquidity run that we formed based on Thursday's expansion up, right? So I was anticipating a retracement into all of this, but there was no setup, so there was nothing to enter on. So that was the week. Compared to ES, I still don't know what ES is doing. ES is moving higher, and dollar is moving higher at the same time. They're completely decoupled. Also, a thing that I forgot to note is that Thursday's trading with that long setup that I was looking for, DXY also supported that because we were retracing up into this bearish breaker here, bearish fair value gap. And at 8 a.m., when we were retracing here into bullish order block, fair value gap breaker, DXY was retracing up into its bearish order block here. So I was watching that confluence between the two pairs to further enhance my bias. So yeah, that was the week. As I said, extremely clean week this week. I'm so happy to see this compared to the ES price action that has been happening for the past couple weeks, that we're just stuck in that range. And it's so kind of refreshing to see price move like this and kind of being able to call the market and not just being stuck in a consolidation. So going into next week, I'm still anticipating that dollar wants to go up and take its 40 to 60 day high here, and that euro wants to take its 40 to 60 day low here, these relative equal lows. Based on the seasonal tendency, it suggests that the first week or so in June is bearish for DXY. The only thing is that if this is bullish, I don't think that any further retracement is needed, because we already dipped down into this order block here and are having displacement away from it. So I don't see a reason for why dollar would want to go lower. And if it does go lower, the only other PD array would be this bullish order block down here. But it wouldn't make sense to me to have such a deep retracement into that. So, and the same thing for EU, right? There's really no clear PD arrays up here. So we hit that order block, have displacement down, and I think that previous week's high should not be violated. The only thing that I'm seeing in contrast to that is GU has left these clean equal highs up here with its previous week high. So I'm thinking that likely we could go up here and take that, and maybe then that would present a bearish SMT with EU, where GU takes previous week's high and EU does not take previous week's high. So that's something that I'm going to be watching. But in terms of PD arrays, there's not really much. The only thing I see is this fair value gap here. So I'm going to have to wait for Monday to play out. And really, in terms of news, it's a very slow week this week. We only have 2 red cards, one on Monday and then one on Thursday. And the rest of the week, there's really no high impact news. Next week, however, June 12th to 16th, that's going to be a crazy week. We have CPI and FOMC that week. So there's probably not going to be a lot of trading that week. Hopefully, though, even though we have low news this week, we can still have something clean set up. But in terms of the bias, I'm going to look for previous week's low as the draw on liquidity and some type of setup, 2022 mentorship setup to take us to previous week's low. So, yeah, we'll see how this ends up playing out.